Hey there, traders. Welcome back to the forexpropfirm.com YouTube channel. I'm your host, Valentine, the host for today's discussion. We have a special guest joining us for an exclusive interview. Get ready to gain insider knowledge, learn proven strategies, and discover the secrets to trading success. So, sit back, relax, and let's dive in this insightful conversation with our guest trader. Get ready to take your trading to the next level. Let's turn our attention to our esteemed guest, Danush. Danush has a 25k funded account. Let's give a warm welcome to him and dive right in. Danush, please introduce yourself to our YouTube community.
Hi, everyone. This is Danush here. I'm from India. So I've been trading for the past 8 years in this industry. So I've been an institutional trader, and with Forex Prop Firm, I've been a client for almost 2 years now. So I've just got funded, and I've been trading on the 25k challenge account.
Okay, nice. So you already mentioned you were trading for 8 years, right?
Yes.
Okay, that's a long time. How have you been introduced to trading?
Well, I had my education into the capital markets. So I got a PG in the capital markets, a post-graduation in the capital markets, and then got right into a job as a dealer, so as an equity dealer. So that was in India, and then slowly got introduced to the capital markets, and then understood what the stock market is about, how the dealings do happen from the institutional perspective. And then I moved to Dubai, and that's when I actually got into Forex. So when I got into Forex, I understood trading with my own capital is always on the shortfall, no matter what capital that I come up with. So it was a big challenge. Then I came up with the prop firms. So I got this idea. I heard about prop firms, and I decided, okay, let me just give it a try. So for the last 3.5 years, I've been trying to trade with prop firms. I've traded with multiple prop firms, and with Forex Prop Firm, this is my successful third year.
Okay, that's really good. Nice. So let's go a little bit into your trading strategy. Do you consider yourself a scalper, a day trader, or a swing trader?
See, initially, I would like to tell you, I would like to tell you about my background. So when I traded as an institutional trader, the most trades that I used to do, sitting on behalf of the institution, being on the dealing desk, I used to trade on the scalping aspect. But then there was a certain risk management principles that I had to adhere to. So I had a very narrow path that I could go with. So it was a very little room for me to play or take more risk for. And that's when I had the habit of being a scalper. But then after getting into Forex Prop Firm, I had a lot of, relaxation in terms of the rules. I found it very comfortable and convenient and flexible to take trades and sit on it for a long time and eventually become a swing trader.
Yeah, yeah, that's true. In my opinion, the rules are really straightforward, and you can really be flexible with the trade time and stuff like that. So it's really good in my opinion. Okay, so what are your most favorite trading pairs?
Well, it's always to say that gold has always been the favorite for all. Trading on gold, especially on commodities. So oil is something that I always prefer to stay away from because of the geopolitics and the recent wars and a lot of things that make the oil as a commodity very volatile by nature. So I always stuck to gold, and no matter what kind of volatile market it is, gold is always a safe place to trade. And just striking the swing positions on gold and trying to achieve 2-3% profit on each trade it's good actually. So also to add to gold, I used to trade on Forex as well. So on Forex, I used to pair on trade on mostly on euro dollar. So I used to have certain positions, and these positions are like a week's time kind of a position. So I used to enter the market when there is a proper, buying opportunities. So I do various way of analyzing the position. I mean, before entering the position, I size the position. So I use various tools like, tree and wavy bib. So I look at the timing, how things work. So I take the trade very carefully because it's all that matters is when you are able to enter the trade at the right time with the right
Hmm.
quantity. Once
Yeah.
the entry is perfect, I mean, like no matter where you exit, you're still going to make money. So that's what I strongly believe in.
Yeah. Yeah, that's true. Can you briefly describe your trading plan? What is it that you're looking for before you take a trade?
Well, if I have to speak about my trading plan, basically, I have to prepare my groundwork. So, my groundwork would be to just ensure there are certain economic events which are not affecting the trade plan. And I trade on a very low volume duration, just like when the Australian session is open, or when Frankfurt session is open, or when the
Hmm.
Tokyo session is open. So that's when I usually take the trades and enter the position, because there is not much of volatility there, and so that gives me a strong ground to enter into the position. So be it gold or forex, I would always prefer to trade at that particular timing, and of course I size my positions according to the balance that I have. So because there is a lot of situations that we end up hitting our drawdowns. I've blown up several accounts in my past, and that's when I had the detailed experience to be very careful. Despite being an institutional trader, trading on a personal level is way different than being an institutional trader.
Yeah, I think it's a little bit different because your emotions are a lot different than when you're trading institutional, right?
In institution, you're at the end of the day you're answerable to someone, but then you're not the one who's going to get affected. You're just answerable. I mean, there
Yeah.
are not serious consequences. Hardly you might lose a job, but then here, whereas trading on a personal wealth, like there's a lot of things at stake.
Yeah. Yeah, that's true. Okay. So tell us a little bit about your trading history and your journey that you have been on in the last couple of 8 years, you said.
Well, I started my journey in the year 2016, 2015. So when I began, I was too late for the Bitcoin entry. So in the crypto space, so I was just trying to make money on the Indian equity market. So Indian equity market had its own limitations, and then like slowly graduated into the forex market. So I had to move to Dubai due to that. And once I moved to Dubai, I had much more exposure into cryptos and forex, and I understood that forex has been like one of the major deal. So that's where most of the money is made out actually, and I prefer to be on the long game and in the bigger market.
Hmm.
Despite being a smaller fish, I still would be swimming very well in a calm place, unlike in a volatile space. And
Yeah.
joining Forex Prop Firm has really helped me to enlarge my cap size. Like the capital that I'm trading with earlier on my personal account was way different, and now trading with Forex Prop Firm with their funded accounts, it gives me a lot of edge.
Okay, awesome.
And then, like, once I started with Forex Firm, and I've been trading on various different account sizes, and did blew up almost about 15, 20 accounts in the past. It took a lot of time for me to get to that learning edge, because there is always a one small mistake that ends up blowing up the account. But then recently with Forex Prop Firm, the rules have been way more relaxed, and it's been way more convenient to take any size of account and then just start trading. And like if you're sticking to the plan, you're having the right risk management, I'm pretty sure no matter how slow or fast you move, you eventually make clearing the challenges and getting funded.
Yeah. Yeah, that's true. I definitely understand where you're coming from. Okay. Yeah, that's in my opinion the biggest difference for me was the transition from a personal account to a funded account, because at the end of the day I tried to make money on a $500 or $1,000 account, which really isn't that much even if I did 8 or 10% a month, which is a lot, but I really hadn't the capital to make enough. So in the prop firm game, in my opinion, you can really scale up the capital that you have to make money and put this money into your personal account. And after that, you can grow it up. But funded accounts are such a great opportunity. And I remember when I started out, it was like around 2019. I really didn't know about funded accounts. It really just blew up later on. But I'm really grateful for the opportunity to have them here.
Yeah, very nice to hear, Valentine. Like as you said, making about a percentage gain in your own personal account is not much of a big deal. But then you're making a percentage on a funded account where you are mostly funded 99% of the funds, because you hardly pay about 0.5% of the registration fee for the whole account, and
Yeah,
you get the access to the whole 100%. And even you end up making 1% or 2%, it still makes a huge difference rather than
yeah,
making 10% on a very small personal wealth.
yeah,
Ultimately, the bottom line is way more attractive trading with prop firms rather than trading on own capital.
yeah, of course, of course. Okay, so please share a challenge that you faced in your trading career and how you overcame it.
Well, the biggest challenge that I had to face was, like understanding the rules of the prop firm, because when you're trying to transition from a personal trader, like trading your own wealth, and to
Mhm.
trade for a prop firm, the biggest transitional phase in that particular time, like the biggest issue is that you don't really understand which small mistake would end up costing you the account. The drawdown is very close by, and so, though it has a sufficient drawdown, the Forex prop firm, the best in the industry. I've traded with various other prop firms, and I've traded with various other platforms, which I don't think it should be named here. But then there are rules there. The drawdown limitations is based on certain conditions, and you cannot trade on particular timing. There is huge restrictions. But then, like when I happened to trade, the biggest challenge that I was facing was to transition from trading on the personal wealth and to trading on a prop firm account. So
Mhm.
that transition took a lot of time and did make me blow up almost about 15, 20 accounts. And then after being seasoned in that, that's when I felt, okay, maybe now I am in the right place and right time to trade on the prop firms. It's a
Okay.
lot. It's a long journey.
Yeah, yeah, I understand that. What is the typical risk that you're using when you're trading?
Well, for the risk, I basically go with 1:3. Since I trade mostly on swings, so I have a like a decent 1:3 ratio. So I take the trade. Let's say I am taking a zero point 0.5 lot on gold, and I'm just holding on to the gold for until and unless I make about 2 to 3% on the overall account size. So having a 1:3 risk reward ratio is what I would personally go with my risk management.
Okay, nice. Yeah, that's what I'm doing as well. Sometimes even only 1 to 2, but it
Mhm.
really depends on where I'm at. But in my opinion, 1 to 3 is really good. There was some time I remember when there were forex gurus talking about 1 to 10s and 1 to 20s and stuff like that, which is really crazy because at the end of the day, all you need is 2 or 3 R on a consistent basis. You really don't need much more because, in my opinion, let's imagine you being in a trade that is going to run to 10R and you're like around 8R. You didn't take off any profits, and now the trade is returning from the 8R to stop you out at break even. What is the reason for doing stuff like that? In my opinion, it's just stupid.
Yeah, I understand. I understand that opinion, but also I would like to add, it's just that like there is something called mostly about people miss to focus on the profitability rather than they focus on the accuracy. It
Yeah,
doesn't matter how many times you get accurate. Ultimately, the bottom line is how much profit you're making. So even if you happen to take 10 trades, you blow up seven, eight of them, you have one good trade, it's going to make up pretty well. That happens in the case where you're having a risk to reward ratio of 1 to 10, 1 to 5, and above. But
yeah,
if you are going with 1:3, like each trade matters a lot for you. Like though the duration is short, you don't have to spend too much time on each trades. So you simply achieve your target, you exit, and it doesn't let you have that anxiety or more of a mental pressure. So
Yeah.
it's good to be on 1:3 personally for me. And I would rather advise anyone who's trading to trade on 1:3 than going for 1:5 or 10 or anything
Yeah.
about.
Yeah, it's definitely, you're going to be a lot more profitable when you're going to do that, because it's easier to frame a 1 to 3 than going for a 1 to 10, because I can almost find a 1 to 2 or 1 to 3 R every day, but I'm really picky with my setups. When I started out, I was going to trade London, I was going to trade New York, I was going from Monday to Friday, and that was just too much. Now I'm focusing on 2 to 3, most of the times 2 high quality setups per week that are mostly formed on Wednesday or Thursday, and that's all I need. I have 2 or 3 hours where I'm really focused on the session which I'm trading, and after that I'm completely done for the week. I don't trade Mondays, I don't trade Fridays, and I think there lies a lot of power in subtracting stuff from your trading as well. Because when I started out, I was thinking about always adding new things to my trade. But after I started to really be picky with my setups and to really leave stuff out like Mondays, I saw my performance wasn't that good on Mondays. I was doing much better after I crossed out the stuff where I were not really good and focused on the stuff where I really made good profits. And after that, just as I said, I'm going for 2 trades, 3R. If I have one loser, I'm going for another shot. Let's say if I get my 3R, then I'm done for the week. I have 3%, and that's all you need, in my opinion, because capital really is going to do the rest for you.
Yeah, exactly. Since we do have a bigger capital, being funded by the prop firms, it's definitely going to be very helpful in a much more relaxed manner, so we can take trades. That's what the plan is. Actually, that's what I've been doing for the last few months right now,
Yeah.
and I find it more effective and result oriented, because this is where I'm able to make money rather than being focused elsewhere, trying to take trades every minute, every second, trying to scalp. So yeah, it was pointless. Just take a
Yeah.
couple of trades for the week, then just be relaxed for the remaining time. And I especially don't trade on high volatile times. Like, I
Mhm.
follow up the economic calendars, and I especially stay away from any key decision moments, any data releases. So I try to be on when the market is sleeping. I try to make my way in, and then once the market is even a slight volatile, or even during the US session, when it opens, we see the market spiking up a little bit or going down a lot. So that's
Mhm.
when I make my exit. So
Yeah.
that's how my trading plan has been.
Yeah, yeah, that's a smart way. In my opinion, I do not trade stuff like NFP, FOMC, or CPI because they are so volatile. And most of the times, if you really get it wrong, you will get slipped up very bad. And the 1% SL is going to be like minus 5%, which is insane. And
Yeah.
I had that happen to me. And I swear to myself, I'm not going to do that again. And yeah, there's a big opportunity to make a lot of money, but the risk is definitely higher than the reward that you're getting from doing stupid stuff like that, in my opinion.
Very true. Very true. The slippage is a very measurable, considerable thing. Now, we cannot just take risk on high volatile times, because if it works in your favor, you end up making good money. But then if it's wrong, I mean, you just blew the account.
Yeah, yeah. Okay, so how long did it take for you to become a consistent, profitable trader?
Well, that's a good question, because I've been trading for the last 3.5 years with prop firms, and now I find it decently set in. From the last 1 year, I've been doing well on the trades. So, like, it took me a lot of time. It's not a one day's game. People come up thinking that it's a good way to earn quick buck, but then it's not. it takes a lot of time. You have to get seasoned, you need to understand how the rules work. And especially, it's mostly about risk management. No matter what hidden talents people have, no matter how they can entry, it's always the risk management that helps them to be a disciplined trader and
Yeah.
make them a consistent, profitable trader.
Okay, nice. So the last question is going to be, what recommendations do you have for a trader that is just starting out?
Well, just don't rush into, highly volatile trades, and take your time. Analyze each and every moment that you're trying to take a trade, and go ahead with your technical research and tools, like use Fibonacci, whatever may be your tools. But then ensure that each of your entry is very accurate. It's very properly sized and following the market trends. Just stick on to a very low risk kind of a trade, unless and until you are finding it a really good opportunity. If you really think that you want to take a risk on your profits, not on the actual size of your account. Once
Yeah,
once you're on a profit, I mean, taking risk eases the game much more better. Of course, you're risking your profits, but then you're not risking your account. So yeah, that's what my advice would be.
yeah. In my opinion, the biggest things for me were risk management and just discipline. These two helped me to increase the profitability a lot because when I started out, my discipline were slacking off because I was going to a trade here, and I really had no plan with what I'm going to do. And now I'm going to do a weekly outlook on the weekend. I'm going to focus in on which sessions I'm going to trade and which sessions I'm available. And after that, I'm going to check if there is an opportunity for me. When I started out, I was looking at the charts and I framed a trade everywhere because at the end of the day, you can make an argument to find a trade every day and every session. That's just the way it is. And that is the problem that I had because I really couldn't differentiate between high probability and low probability. And it was more of luck when I hit a good trade, you know what I mean? So
Yeah.
that was the biggest things for me.
Yeah, having the right risk to reward ratio will ease your game. I mean, like, it definitely helps any new trader to be more disciplined. If you have the right risk to reward ratio and you're being very consistently following it, it definitely makes a lot of sense for you to hold on to this game for a longer time.
Yeah.
And let me tell you guys, it's just that the longer the duration that you're in this market, you eventually make money. I mean, if you come with a lot of hype and hopes, and then you have a lot of energy that you would like to try your luck with, then you won't be here for long. So if you want to stay here, if you want to make money, you have to stay long and take less risk and go for a longer run.
Yeah. Yeah, and a good quote is that trading is not a sprint, it's a marathon. And you need to be here for the long run and not just a short, intense run. Yeah, really good point. Okay, perfect. Danush, thank you so much for your time and sharing insights into your trading strategy and how you became funded. If you guys want to know more about FPF, you can go to the first link in the description. That's it for this video. See you guys in the next video on the channel. Until next time, happy trading.